Page 7, it is the Missouri Health Insurance Pool Assessment Credit. The Missouri Health Insurance Pool provided health insurance to Missourians who could not obtain health insurance in the regular market. With the passage of Senate Bill 262 in 2013, the pool ceased issuing new policies January 1 of 2014. Any remaining credits from prior assessments will continue to be applied per the statute. These credits may be carried forward until used. The last credit that was redeemed, though, was in 2015, and I think we have $9,355,448 that are still outstanding. The last one is on page 9. And it is the Missouri Property and Casualty Insurance Guarantee Association tax credit. So again, states have the guarantee associations to protect policyholders in the event of an insurer's insolvency operating in the state. All insurers issuing property and casualty insurance in Missouri are members of the Property and Casualty Insurance Guarantee Association. The association assesses members to pay claims of insolvent insurers, and then they're allowed to take those assessments as a credit against the premium tax. Credits are taken over 3 years with 33 1/3% each year, beginning the year after assessment. There is no carry forward, and there were no assessments in 2025. Any questions?
Any questions? Thank you
Thank you.
very much. Health and Senior Services, page 13.
Oh. Took the book.
Good morning.
Good morning. Good morning, Chairman and members of the committee. My name is Patrick Cosby, Agency Senior Budget Analyst at the Department of Health and Senior Services. Thank you for the opportunity to present this morning. We will begin with the medical preceptor tax credit on page 13. Qualified community-based faculty preceptors are allowed under Missouri state statute to claim a tax credit of $1,000 for each preceptorship up to a maximum of $3,000 per year. Funding for this credit is generated from a portion of license fees for physicians, surgeons, and physician assistants. There is a cap of $200,000 per fiscal year on this tax credit. Next, we have the Shared Care Tax Credit found on page 15. Shared Care is a program in which eligible families who provide care to an elderly family member in their home may request a tax credit. Caregivers who meet the requirements within the program are eligible for a Shared Care Tax Credit in an amount not to exceed $500 to defray the cost of caring for an elderly person. This concludes the Department of Health and Senior Services.
Thank you. Any questions? None. Thank you very much. Department of Natural Resources.
Good morning, Mr. Chair, members of the committee.
Good morning.
My name is Nora Maxwell. I am the Deputy Director for the Division of Energy at the Department of Natural Resources, and I'm going to be talking about the wood energy tax credit this morning. Statutory authority for the authorization of credits was reinstated and extended to June 30, 2028. There is an annual cap of $6 million, subject to appropriations. For fiscal year 26, the appropriation for the tax credit was $4.8 million. Of that amount, $1.8 million was one-time funding. This credit allows $5 per ton for wood products from processed wood residue. A credit of $20 per ton for wood used in charcoal production is allowed. That's all I've got. Any questions? Thank you very much.
Department of Revenue. on 23, I think it
Yeah,
says,
yes, sir.
correct?
All right, good morning, Chairman, members of the committee. Joshua Shoemaker, I'm Deputy Legislative Director for the Department of Revenue, and I will be going through the tax credits the Department administers, starting with Special Needs Adoption Tax Credit on page 23. This tax credit it assists non-recurring adoption expenses of a special needs child that is a resident of the ward or the state. This was revised starting January 1st, 2022 to expand it to any child that is a resident or ward of the state. But there were 16 credits redeemed in fiscal year 2025 in the amount of $49,766. The next one, the adoption
Can I
tax.
stop you just a second?
Oh, yes, sir.
I was just reminded I didn't do a very good job of this at the beginning, and there's a lot of people left, but everybody that does participate in speaking needs to have their witness form, and
Got it
you can
right.
either do it here or online, right? So, thank you.
All right. All right. Moving on, page 25, the adoption tax credit. Like I mentioned, this was expanded starting January 1st, 2022 to include any child as a resident or ward of the state of Missouri. It's for 50% of the credit can be claimed when a child is placed in a home and 50% when the adoption is final. There's a 4-year carry forward, and there were 15 credits redeemed in fiscal year 2025 in the amount of $114,443. Next one, the bank franchise tax credit, page 27. The franchise tax has stopped, so no new tax credits are allowed to be authorized after January 1st, 2020. So there were 0 credits redeemed in fiscal year 2025. The next one, page 29. Bank tax credit for S corporation shareholders. This is a credit available to shareholders that are banks, bank holding companies, savings and loans, and credit institutions. No cap on the credit, and there were 545 credits redeemed in fiscal year 2025 in the amount of $1,647,551. The next one, page 31, is the biodiesel producer and distributor tax credit. This is a tax credit for producers who produce E85 gas. The credit is 2 cents per gallon sold. The credit has a $5.5 million cap, which is refundable, and there were 6 credits redeemed in fiscal year 2025 in the amount of $3,112,981. The next one, page 33, is the biodiesel retailer and distributor tax credit. This tax credit is for retailers who sell biodiesel fuel, and the credit is 5 cents per gallon sold. It has a $16 million cap, and there were 4 credits redeemed in fiscal year 2025 in the amount of $15,185,330. The next one, Champion for Children's Tax Credit, page 35. This is a credit for 50% of donations made to an eligible organization as determined by the Department of Social Services. Cap is $2.5 million annually, and there were 1,246 credits redeemed in fiscal year 2025 in the amount of $1,544,879. The next one, page 37, Disabled Access for Homeowners Tax Credit. This is a credit for persons who incur costs for qualifying renovations to make their home accessible to a person with a disability. The cap is $100,000 per year, first come, first serve, and there were 3 credits redeemed in fiscal year 2025 in the amount of $9,436. The next one, page 39, Disabled Access for Small Business. This is a tax credit for provided to businesses and corporations that make their business more accessible to people with a disability. The credit is $5,000 per business with no more than 50% of the expenses eligible. And there were 2 credits redeemed in fiscal year 2025 in the amount of $9,406. Next one, Ethanol Retailers Tax Credit. This is a tax credit for retailers who sell E85 gas. The credit is 5 cents per gallon sold. The credit has a $5 million cap, and there were 2 credits redeemed in fiscal year 2025 in the amount of $807,304. Next one, Food Pantry Tax Credit, page 43. This is a tax credit for taxpayers who make a cash or food donation to a food pantry, soup kitchen, or homeless shelter. There is a cap of 1.75 million, and we are apportioning about 50% of that credit recent years. There were 3,136 credits redeemed in fiscal year 2025 in the amount of $1,697,778. The next one, page 45. Homestead disaster tax credit. This is a tax credit up to $5,000 for insurance deductibles incurred in a homestead during the calendar year 2025 as a direct result of a disaster declaration made by the governor. As of yet, there has been 0 credits redeemed in fiscal year 2025, but this just started. So, the next one, long-term care deduction, page 47. The tax deduction for non-reimbursed amounts paid by the taxpayer for qualified long-term care insurance premiums that are not included in taxpayer itemized deductions. 0 cap on this one, and there were 55,862 deductions made in fiscal year 2025 in the amount of $10,072,346. Next one, page 49. Peace officer surviving spouse tax credit. This is a tax credit for surviving spouses of public safety officers whose death occurred in the line of duty, equal to the amount of the property taxes paid. No cap in the program, and there were 63 credits redeemed in fiscal year 2025 in the amount of $365,664. Next one, senior citizens property tax credit, known as a circuit breaker, page 51. This is a tax credit for homeowners or renters for the property tax they pay. To be eligible, they must live in Missouri for the year, be over 65, or be a veteran who became 100% disabled as a result of such service, or 100% disabled, or be 60 years old and receiving surviving spouse Social Security benefits. The current maximum income threshold is $30,000 for single and $34,000 for married. Phases out as income rises, and the current cap for homeowners is $1,100, and for renters is $750. There were 102,235 credits redeemed in fiscal year 2025 in the amount of $60,595,889. This tax credit was revised House Bill 594 from last year, so that bill increased the maximum income threshold and the cap, so you should see an increase in the redemptions from this year, next year forward. Next one, page 55. This is SALT Parity Act. This is a program that allows taxpayers to file taxes on the entity level rather than the partnership level. The redemption includes how much was received from the companies rather than the employees. So there were 34,924 credits redeemed in fiscal year 2025 in the amount of $409,676,338. The next one, self-employed.
Let's back up to 53.
Yes.
Rolling stock tax credit, I think.
Oh, I'm sorry.
Either that or I missed it.
No. That's the State Tax Commission. Dan's here. He'll go over that one. I should have mentioned that. So yeah. Page 57, self-employed health insurance tax credit. That's a tax credit for self-employed taxpayers in an amount equal to the portion of the taxpayer's federal tax liability due to the taxpayer's inclusion of the federal income tax health insurance premium in their federal adjusted gross income. There's no cap on this program, and there were 4,343 credits redeemed in fiscal year 2025 in the amount of $1,754,262. And then, last but not least, page 59, the working family earned income tax credit. This is a credit portion of the federal EITC credit claimed. This credit can be claimed by taxpayers with the filing status of single, head of household, widowed, or incurring married filing jointly who is allowed a federal earned income tax credit. It does not have a cap. And for fiscal year 2025, there were 185,183 credits redeemed in the amount of $45,518,568. And that is it. Any questions?
Any questions? Thank you.
All right, thank you, sir.
Good morning, Mr. Chairman. Dan Hutton, State Tax Commission. We have the rolling stock tax credit, which is an appropriated tax credit for eligible expenses of the repair of rail cars private rail cars in Missouri. The governor did not recommend this for the budget this year.
Any questions? Thank you. Department of Social Services. Starting on page 61.
Good morning, committee. My name is Austin Chambers. I'm with the Department of Social Services. I'm here to discuss the 6 tax credits that we administer. To start off, we're going to discuss the developmental disability tax credit. It's to provide a tax credit for qualifying taxpayers who make eligible contributions to qualifying developmental disability care providers. This tax credit does not have a cap, and it can be carried forward for 4 years. The next tax credit is the diaper bank tax credit. It's to help fund diaper banks to assist infants, children, and incontinent adults with disposable diapers and other hygiene products. House Bill or Senate Bill 43 and House Bill 121 from last year allowed for a qualifying diaper bank, it has to be a part of a national diaper bank. And that was the major change for that one. The tax credit equals 50% of the donation made to a diaper bank. The tax credit may not exceed $500,000. Sunset is set for December 31st, 2031. The tax credit can be carried forward for 1 year. The next credit is the maternity home tax credit. This tax credit is to provide a tax credit to qualifying taxpayers who make eligible donations to qualifying maternity homes. And there is no cap on the tax credits. And there is a 1 year carry forward. The pregnancy resource tax credit is to provide a tax credit for qualifying taxpayers who make eligible contributions to qualifying pregnancy resource centers. A qualified agency is a non-residential facility which provides assistance to women and families in crisis pregnancies or unplanned pregnancies by offering pregnancy testing, counseling, emotional and material support, and other similar services to encourage and assist women in carrying pregnancies to term at no cost to the clients. There is no cap on this tax credit, and there is a 1 year carry forward. The next credit is the residential treatment agency tax credit. This credit, the purpose is to provide a tax credit for qualifying taxpayers who make donations to eligible residential treatment agencies. Donations are to be used solely to provide direct care services to children who are residents of this state. Direct care services include, but are not limited to, increasing quality of care and services for children through improved employee compensation and training. There is a 50% donation credit for this one. In fiscal year 26, we have had 0 issued, and there was a 4 year carried forward. The domestic violence tax credit, or rape crisis tax credit, is to provide a tax credit for qualifying taxpayers who make eligible contributions to qualifying domestic violence shelters or rape crisis centers. In fiscal year 26, we had 53 qualified agencies, and there is a 1 year carry forward. And that concludes our tax credits. Is there any questions?
Any questions? Thank you.
Thank you.
Very much. State Treasurer's Office, 8788.
Good morning, Mr. Chair and members of the committee. My name is Doug Shull. I'm the Assistant Treasurer, Deputy Treasurer for the state of Missouri. I'm here to present the tax credit that our office administers, which is a Missouri Employment Scholarship Account Program tax credit. This is a tax credit that any taxpayer may claim not to exceed 50% of the taxpayer's state liability for any qualifying contribution to an educational assistance organization. The usage of those funds that are donated is governed by statute, which includes that 90% of those must be used to fund scholarship accounts for the students. This tax credit can be carried forward for 4 years. It is not sellable or assignable. In fiscal year 2025, there were 19.5 tax credits issued, and there were 13.6 that were redeemed. Is there anything else?
Any questions? Thank you, Doug.
Thank you.
Yep. It's time, isn't it? Economic development.
Good morning, Chairman, members of the committee. My name is Brooklyn Wasser. I will be facilitating and presenting on some of the tax credits administered by the department, but we're going to go ahead and start with Missouri Housing Development Commission.
Good morning, Mr. Chairman, members of the committee. Kip Stetzler, Executive Director of the Missouri Housing Development Commission. We'll start on page 3 of your blue book. And if you'll flip to page 4, you'll see some information about the first of 2 tax credits that MHDC administers. It's the Affordable Housing Assistance Program, often referred to as the AHAP tax credit. It's a donation or contribution tax credit. So when one donates, for example, $100 to a not-for-profit that engages in housing activities, that donor receives a $55 tax credit. So $100 donated, $55 tax credit. So very efficient tax credit program. Typical not-for-profits that are involved with this program are Habitat for Humanity, Salvation Army. There is an $11 million cap. $10 million of that is for production, $1 million for operating, 10-year carry forward. And happy to answer any questions about that program. The second tax credit administered by MHDC is the Low-Income Housing Tax Credit Program, or the LIHTC, if you will. This is a program that was established by statute in 1990 following the federal LIHTC program established during the Ronald Reagan administration in 1986. This is for the production of affordable housing units, either by way of typical apartment complexes, townhomes, duplexes, even single-family residences. There is a 5-year carry forward, 3-year carry back to qualify as an affordable housing development that can receive the LIHTC, both federal and state. The development must lease 20% of its units to families earning 50% of area median income or less, or 40% of its units to families earning 60% of AMI or less, or their average AMI per household is 60%. So either any of those 3 ways they can qualify as an affordable housing development and qualify for the LIHTC distribution. Happy to answer any questions.
I don't see any. Thank you very much.
Thank you, Mr. Chairman.
And now we will have Missouri Development Finance Board present.
Good morning. Sorry. Good morning, Mr. Chairman. My name is Katie Long, and I'm the Finance Programs Manager at the Missouri Development Finance Board. We have 3 tax credits. The first one is on page 11, and it is the Bond Guarantee Program. This is a discretionary program that was created in 1989 to provide a guarantee for major public infrastructure projects. The cap for the program is $50 million, and for this one, credits are only redeemed in the amount of default and debt service payments. The credits can be carried forward for up to 10 years, and they are sellable and transferable. The next program is on page 14. It is the BUILD program. This is also a discretionary program administered jointly with DED. Created in 1996, this program provides financial incentives to attract or expand large business projects based on their investment levels and their job creation commitments. This program has an annual cap of $25 million, and it is tracked across the total debt service of all companies with active bonds. The tax credits are distributed over the 15-year life of the bonds, and they are refundable. The third one is the Infrastructure Tax Credit Program on page 18. This program was created in 1985, and it is used to assist in the funding of capital improvement costs for qualified public facilities and public infrastructure projects. This program has a $10 million annual cap each calendar year. Credits are issued at 50% of the contribution made towards the approved project, And these credits can be carried forward for up to 5 years, and they are also sellable and transferable. So I'd be happy to answer any questions on any of these 3 programs.
No questions. Thank you.
Thank you.
I will get started on page 24 with the Missouri One Start Community College Training Program. This program combines funds for 2 training programs, a new jobs training program and job retention training program. The new job training program provides assistance to eligible companies to train workers in newly created jobs and is suited for large attraction and expansion projects. The job retention training program is suited for large retention projects and provides training to upskill existing workers. It is a discretionary program. It is appropriated annually at $27 million, and it is cannot be carried forward, carried back, sold, or refunded. On page 29 is the intern and apprentice recruitment tax credit, which authorizes an income tax credit to eligible taxpayers who hire an intern or apprentice at a pay rate equal to or greater than the minimum wage with additional requirements. This is an entitlement program with an annual cap of $1 million. It has no carry forward, no carry back, cannot be sold or assigned, and it is not refundable. On page 33 is the Advanced Industrial Manufacturing Zones. This program diverts withholding taxes from new job creation and established AIM zones to the Port Authority. It is an entitlement program. There's no cap. It has a sunset date of August 28th, 2030, and it does not have any carry forward, carry back, cannot be sold or assigned. It is not refundable. On page 36 is the Amateur Sporting Contribution Tax Credit. This program provides an incentive for donations to certified sponsors and local organizing committees with a support contract for a sporting event. It is an entitlement program. It does have an annual cap of $500,000 with a sunset date of August 28th, 2032. Has 2-year carry forward, no carry back, cannot be sold or assigned, and it is not refundable. On page 39 is the Amateur Sporting Ticket Sales Tax Credit. This program provides a tax credit that is designed to encourage the location of competitively bid amateur sporting events in Missouri. It's a discretionary program. There is an annual cap of $6 million, a sunset date of August 28th, 2032. It has 2-year carry forward, cannot be carried back, cannot be sold or assigned, and it is not refundable. On page 43 is the Brownfield Redevelopment Program, which provides an incentive to businesses and developers to redevelop property contaminated with hazardous waste. It is a discretionary program. It does not have a program cap or a sunset date. It has a carry forward of 20 years, cannot be carried back, can be sold or assigned, and it is not refundable. Page 47 is a Historic Preservation Tax Credit. This program provides an incentive designed to encourage the redevelopment of commercial and residential historic structures in Missouri. It is an entitlement program. It has an annual cap amount of $134.4 million for large projects. There is no cap for small projects. It does not have a sunset date. The carry forward is 10 years. It can be carried back 3 years. It can be sold and assigned, but it is not refundable. On page 51 is the Neighborhood Preservation Tax Credit, which provides an incentive for any taxpayer who incurs eligible costs for a new residence or rehabilitates a residence for owner occupancy that is located in a designated area. It is an entitlement program. It has an annual cap of $16 million, $8 million for eligible areas and $8 million for qualifying areas. It does not have a sunset provision. It has carry forward of 5 years, carry back of 3 years. It can be sold or assigned, and it is not refundable. On page 55 is the Business Facility Headquarters Tax Credit. This is a tax incentive to facilities for the expansion of newer existing businesses in Missouri. They have to have headquarters or be headquartered in Missouri. Entitlement program, there is no cap. It has a sunset date of December 31st, 2028. Has 5-year carry forward, no carry back. It can be sold or assigned, and it is not refundable. The Entertainment Industry Jobs Act provides a tax credit for rehearsal and tour expenses that meet the minimum rehearsal and tour requirements. It is an entitlement program. It has an annual cap of $8 million, has a sunset date of December 31st, 2030, has 5-year carry forward, no carry back. It can be sold or assigned, and it is not refundable. On page 62 is Motion Media Tax Credit Program, the SHOMO Act, which provides a tax credit for in-state expenditures on qualified motion media productions. It is a discretionary program. It has an annual cap amount of $16 million, $8 million for film productions and $8 million for series productions. It has a sunset date of December 31st, 2029. 5-year carry forward, no carry back, can be sold or assigned, and it is not refundable. On page 68 is the Missouri Works program, which is a tool for expansion and retention. It helps businesses access capital through withholding or tax credits to embark on facility expansion and create jobs. It is both entitlement and discretionary. It has an annual cap amount of $201 million. It has a sunset date of August 28th, 2030. No carry forward, no carry back. It can be sold or assigned, and it is refundable. On page 72 is the Qualified Research Expense Tax Credit Program. The incentive is available to an eligible taxpayer who has additional qualified research expenses in Missouri in a tax year as compared to the average of such expenses in 3 immediately preceding tax years. It is an entitlement program. It has an annual cap of $10 million, a sunset date of December 31st, 2028, has 12-year carry forward, no carry back. It can be sold or assigned, and it is not refundable. On page 75 is Rural Access to Capital, which promotes workforce development and capital investment in Missouri's rural areas by providing incentives to invest in those areas. It is an entitlement program. It has a cumulative cap of $64 million, and all of that $64 million still remains, and an annual cap amount of $16 million. So the tax credit cap is $16 million per calendar year for 4 years. The date of sunset is August 28th, 2030. Has 5-year carry forward, no carry back, cannot be sold or assigned. It is not refundable, and this is an appropriated program. Page 78 is the Capital Complex Tax Credit Act, a contribution tax credit that provides a credit for monetary or artifact donations to Capitol Complex buildings, including the State Capitol, Supreme Court, Old Federal Courthouse, Highway Building, and Governor's Mansion. This is an entitlement program, has an annual cap of $10 million, a sunset date of August 28th, 2027, carry forward of 4 years, no carry back. It can be sold or assigned, and monetary donations are refundable only. On page 81 is the Family Development Account, which promotes self-sufficiency through asset development for low-income persons through a matched savings program. This is a discretionary program with an annual cap of $300,000. It does not have a sunset date. It cannot be carried forward, carried back, sold, or assigned, and it is not refundable. On page 84 is the Neighborhood Assistance Program, which provides assistance to community-based organizations that enable them to implement community or neighborhood projects in the areas of community service, education, crime prevention, job training, and physical revitalization. This is a discretionary program, has an annual cap of $16 million, does not have a sunset date, has carry forward of 5 years, cannot be carried back, cannot be sold, and it is not refundable. On page 89 is the Small Business Incubator Tax Credit Program. A taxpayer who makes a contribution to an approved small business incubator sponsor or fund can claim a state tax credit for a percentage of such contribution. This is a discretionary program with an annual cap of $500,000, no sunset. It has carry forward of 5 years, cannot be carried back. It can be sold or assigned. It is not refundable. On page 92 is the Youth Opportunities Program. This is a contribution tax credit program which broadens and strengthens opportunities for positive development and participation in community life for youth and discourages criminal and violent behavior. This is a discretionary program with an annual cap of $6 million, no sunset, can be carried forward 5 years, no carry back, cannot be sold or assigned, is not refundable. And the remaining programs in the book have either had the cap exhausted, they've sunset, or they've been eliminated by statute. I'm happy to answer any questions.
Any questions? Seeing none. Thank you, Ms. Wasser, very
Thank you.
much. Thank you all. Any business to come before the group? Hearing none, we are adjourned.